This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. We're seeing a relatively quiet session. As we looked around at the week, the range is definitely kind of converging, especially in that corn market. Right now, hovering around 372, which is a very pivotal point. In fact, we're calling it a pivot point. This represents the 50% retracement, or basically the middle of the range from those September lows to the October highs. We're looking for a little bit more conviction, either to buy lower or sell higher. Key technical support continues to come in 366 to 368. If we run down here and hold, we'd like to be buyers and think this market could run back towards the top end of the range, which really doesn't come in about 377 to 378. That pocket representing the 50 and 100-day moving average. If you look a little bit further out on an extended time frame, we still like corn on a longer term basis, but really need to see a fundamental backdrop to give us that key technical breakout that we want to see. Now, moving over to the soybean market, a lot of volatility here over the past couple of sessions as some jawboning back and forth continues between China and the U.S. as we go into that G20 summit. This morning, we got a word from President Trump that he remains optimistic. We'll go figure. Of course he's going to say that, but we saw a bigger headline in our mind come out that China wants to de-escalate trade tensions as well. And this is a little bit more meaningful to us. Not necessarily that we're going to get anything of it, but at least that they want to take those steps. If we get a premium or some short covering into the weekend and get January closer to 9 to 906, I wouldn't mind being a seller into the weekend. I don't think anything comes of this meeting, and if nothing comes of this meeting, I expect to see a gap lower come Sunday. Key technical support, if that does happen, comes in 875, representing the 50 and 100-day moving average. Now, wrapping things up with the wheat market. Wheat March futures right now kind of in the middle of no man's land, around 510, 511. We see significant resistance, 520, and support, $5. So not a whole lot to do here. If you want to be long this market, consider looking at the Kansas City contract. I think there's going to be more opportunity there. And if you want to maybe potentially hedge your risk a little bit, you could look at buying Kansas City and selling Chicago, looking for that spread to narrow there. There's still about 15 cents there, and I wouldn't be surprised to see Kansas City go to a premium over time. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.